dollar today. Just had FOMC, so big move in the market. Wednesday, we still got Thursday and Friday left on the week, but just going to cover all the opportunities we had today, pre-FOMC, and also what FOMC did and everything, right? So all that good stuff. But as we know from what we've been talking about on Euro for the last little while, start off here on the higher time frames, just to get an idea of where price could be heading to in the future. On the weekly here, you can see we had that big sell-off. Like we've covered in the past, we've grabbed these lows, induced sellers in the market, and also grabbed all that liquidity, right? So long term, I do have my eyes on this high, okay, 1.1275, where we're going to have lots of liquidity, most likely engineer liquidity on the way there. But going into more of an intra-week perspective, what's been going on over here. So you can see we are kind of squeezing bullish end of November. And then December, we had that sell-off, clearing these lows 1 and 2. Actually, if I have on the weekly here, you can see that we grabbed the weekly low here. Okay, we've been trading, well, actually, sorry, even the week before, we stopped in that imbalance, but we continued going bearish to fill even more. And then we ended up tapping into this weekly order block, you could say, right, for retail to have their eye on, right? If I can just, let me just fix this quick. Okay. So tapped into this area, hop onto the 4 hour, we can see what's been going on. So, and I can just grab this low here. Okay, so big sell-off again starting in December, clearing these lows, taking out buyers and inducing sellers. Look what happens as soon as we tap into this weekly area. Okay, so we tap into this area. Look how the market gives bullish reaction to the upside. Okay, trapping sellers that were looking to sell below the high. Right, any sellers looking to sell below, they've gotten trapped. I'll go down to the 1 hour so we can see a little bit better. So sellers looking to sell in this area, they get trapped, and then the market continues to squeeze down to, look how we induce buyers on the way down for buyers to be entering their positions. Then we trap them. So now sellers have been taken out, buyers have been taken out. Look how now the market moves in the correct direction. Okay, so we've been expecting this for a little bit. It ended up taking a lot longer than I thought it was going to take, to be honest with you. I thought we were just going to start getting some bullish price action late last week, but we didn't. Waited for this week, which is fine. It is what it is. But yeah, so again, look how retail, if they're waiting for a reaction off this blue weekly area, right, they get their BOS, they're going to be buying anywhere in these areas here, right? And then they get trapped. So now the market is ready to move in the correct direction. Okay, so get rid of these. Cool. So big sell-off again. We trapped those buyers. Look at that reaction. We get to the upside. And what did we do? All we did was leave equals. Okay, which is another hint for us. Okay, we didn't take anything out. Leave equals. We get a reaction down, taking out some internal liquidity here. Okay, and we run away ever since. Look how we're now trading below these equals through Asia. All right, and then in late London, we take out Asia, but again, still respect these highs. So that tells me lots and lots of liquidity at the highs. The market trickles down and then takes out this structural point here where sellers would have been, where buyers would have been buying from. Okay, we take it out, and what do we have right below with this fresh imbalance right here? Boom. And I'm pretty sure we can even refine it down to 5. Ended up going all the way to the extreme. Obviously, the benefit of hindsight, we can just mark it out now, though, just to make it a little more clean. Mitigate that area. Look how we've, again, taken out the buyers, induced sellers. right? So here is where sellers are going to be entering. Market, look how it just squeezes, right? Because this is areas that sellers are interested in entering the market from, right here, any of these areas here. So that's why the market squeezes like this to induce them, okay? And it just engineers more liquidity into the market. So again, we mitigate that extreme, tap that liquidity block, run that liquidity point here, and go long. This is on Monday, Tuesday. Tuesday, we end up taking out, back up to the hour. So Tuesday, we take out this high, but we failed to build up any liquidity before we took it. The only thing I can see as a buildup maybe is this area here, and you can see we have a fresh imbalance below, which we end up tapping into, so we can mark that out. But we didn't end up getting anything like this, right? Well, build liquidity like this and then run it. It was more of a, so we go into lower time frames, it'll look more like squeezy. Yeah, you see how we have like this trend, this channel, trend line over here. The market takes the high, traps all those buyers in that trend line here. Okay, right here. Perfect. And then I always tell you guys to identify where the buildup is occurring to help see where which high or low needs to get taken. And that's exactly what happens here. Look how the market sells off, respects this low, okay? Even gives false BOS to the upside, okay? To induce buyers in the market, induce more liquidity into the market. Then we run that low to the left. Right? That inducement from the left gets taken out, and then the market runs the correct direction. Same thing. Okay. So that was later New York yesterday, going into Asia. We ended up engineering more liquidity at this inducement high. Okay. Trickling back down all the way to the extreme. Let's see where we go to. In this area over here. See if there's an area on the 15, I believe. No, there's not. So we'll just mark this here. But again, look how the market first in London, sorry, in Frankfurt, respects this area, takes highs. Look how we get that spike above, and then market comes down, engineers liquidity at the lows, pull back and mitigates the extreme. Something in here possibly. Right? We can actually even go into it. Let's check it out. 5 minute doesn't look like anything too pretty, so we'll go 1. And you got a nice inducement high right here. So a sell anywhere within this blue box was valid because you have that liquidity block. Okay, so again, look how the market traps those sellers. We get that build up of liquidity first. All right, grab that liquidity. We get a reaction to the downside, but we fail to take the liquidity at the lows. Fail to take it. So if we get a bullish reaction to the upside, it's just going to be false. This is going to be engineered liquidity. Engineered liquidity there. Mitigates the extreme, and then we run back down to the downside. So a sell here would have been clean. This would have been in London, an hour and 40 minutes into London. Oh my God, it would have been just 1.3 pips. So let's just open this up a bit. And a London scalp right here, 1 to 4, just like that. Cool. Possible scalp opportunity. And then we take that liquidity here in a couple hours, 2 hours before New York Open. Okay, so let's hop back to the 15 and get an idea of what's going on here. So again, look how we left this liquidity block area down here. Price comes back, mitigates it, right? So now, and we also ran a liquidity point while we mitigated it. So now we have another liquidity block area. The market goes bullish from there. What did we do before we took out this high? We can just hide this. Like how we induce sellers. There's that buildup. Okay. Print that low. Then we go bullish. This is an area that we do not want to be buying from. Okay, look how the market lets buyers get induced. Okay, goes long, and then takes them out. Same thing over and over, and mitigates this liquidity block area here. As for entries, I know this is FOMC, but we can still break it down. Let's go down to the 1 minute here. There was one nice sell opportunity in New York today, and then obviously the FOMC buy occurred. But as for the sell, look how again we get that sell off back down to the inducement low. Engineered liquidity here, so false reaction to the upside, taking out an internal point. Price comes back down. This is not an area we are buying from. Again, this is buying with retail and it's low probability trading. You're essentially just assuming when the market's going to engineer liquidity or not. Okay, so we don't need to do that. We're going to wait for it to get engineered, which we do. It goes long, takes out previous high. But what happened before we took out the previous high? Look at that buildup we get here. Okay, the market comes up, respects it, comes back down, actually builds up even more liquidity here. And then finally takes out the high, okay, and mitigates. If you look right above it, this whole liquidity block area here. Okay, and actually, sorry, my apologies. I should have wanted to point this out before, but before he took out that, before he mitigated the liquidity block area, look how he spiked up, came down again, and then kind of screwed around for a bit for a couple of minutes, and then went bullish, and then sold off to induce sellers. Now that tells me we want to see price above this, okay? Because after this high is taken out, anybody that was trying to sell here gets trapped, okay? So we end up mitigating the extreme to the left, the liquidity block area, and then finally we get that breakdown. The market actually ends up coming back down to the lows, and what do? We engineer even more liquidity. No problem. If we get another reaction to the upside, all it does is provide us another sell opportunity. That's exactly what happens. We get a false reaction up, and where do we come right into? Boom. Okay? Ends up tapping right into this liquidity block area again. And then look how we trickle down. And why are we trickling like this? Why is it squeezing? Why is it so slow? Well, it's because we took out this high. So retail is going to be buying. Same thing over and over. Okay? Look how retail is interested in buying here. So it purposely gives them reactions over and over and over. If honestly, if you want to get even more intricate with this, you can see that we mitigate this 1 minute liquidity block. Look how we break down, induce buyers, take the lows, but we're still trading above this low here. And we take out the inducement high, all right, and then come lower, false reaction, mitigates this whole liquidity block area. This is getting really intricate, but it's just the same thing over and over and over here. Okay, mitigates this 1 minute liquidity block area, and then again comes back down to the low, engineers more liquidity, pullback, and finally we get that sell-off. Okay, and that sell-off runs right into the low that we had marked on before, that inducement low, where the market allowed buyers to get induced, and we were essentially selling into that liquidity point right here. Okay, and as for the long, look how we end up grabbing the liquidity here. Okay, we go bullish. Now we wait for some sort of, we need more data, right? Something to show us that there could be a possible entry coming, and we get print a high here, respecting the high to the left, come down, print the low in the market, and then the market moves back up, taking out the previous high, which tells me buyers will be buying above this low. Okay, so look how the market hunts the buyers. Now we have what? Liquidity block entry, or sorry, a liquidity block area here. What do we do before taking out this high? Well, we build liquidity. And why? Because we took the low. Right? So sellers are interested in selling this thing. The market gives a false reaction. Now we have inducement low. And now just before FOMC gets announced, look how we spike through the inducement low, mitigate the liquidity block area, right? Just like this, and then it's just take off. Look at that. So let's just say, hypothetically speaking, someone took this entry. I mean, obviously with FOMC, it's not the smartest thing to do. You could have took your stop all the way below the low, 4.9, 6 pips. Ends up running over 100 pips, right? I know, again, it's FOMC, so it's not really realistic. It's the benefit of hindsight allows us to see these things, but still everything makes sense to the system. But yeah, that concludes this case study. This is what we're looking like on H4 now. So I do reckon we will push higher now to these areas, these highs here, and finally this high. Not only that high, but again, this guy over here from the daily and weekly we marked out at the beginning of the case study, right? So some things to keep an eye on for sure.